Hi everyone. Today I wanted to talk about the president's plan to reopen the economy. Basically, it's not that different from what we're doing right now. Ray Dalio's current opinion on government bonds. Basically, don't buy them. Paul Singer's forecast for the future of stocks and his fear-mongering, as well as overall market considerations. Then I'll talk about my overall portfolio and some things I did this week. Then one piece of jelly, which is something I enjoyed outside of the markets. Welcome to the Portfolio Bulletin. Alright, so the first thing is Trump's plan to reopen the economy. Basically, it's the same as what we've been doing. Everybody seems to know what the deal is by now. He said he's going to kind of push the plan a little bit to the governors. Not sure exactly what that means in practicality, but he said phase one is going to be continue to telework as much as possible and start pushing out a little bit of non-essential travel, some non-essential jobs. Everyone who's vulnerable to this issue is going to shelter in place just like they've been doing. So stage one is not really any different from what we've been doing, maybe just a little bit more open. Stage two is where things start to get interesting. Non-essential travel can resume, schools and youth activities are going to open. Nobody really knows what that means exactly or what the timeline is for that. It says large venues in moderate social distancing protocols. Does that mean like 3 to 6 feet? Is that 6 feet still? No, what does that exactly mean? Still not very clear. And then phase three is going to be bars, gyms, and large venues can open with limited social distancing and standard sanitation. Again, not really sure exactly what that means, but as soon as he said these things, basically the markets ticked up 3%. They gave back some of those gains, and who knows exactly if those gains are going to hold here in the future. But right now, he's just giving the markets some hope. And he said he's going to push it to the governors, which is a little bit different from what he's been talking about in the past. He said he might retain all control of this kind of shutdown thing, but now he's going to push that a little bit more to the governors, which is giving the market some hope. So, is it time to buy? Probably not yet. Just see what happens with these earnings coming in Q2. There's still a chance for another dip, but it is giving the markets hope here in the short term. The next thing that I wanted to cover is Ray Dalio's position on bonds. He said in an interview recently that you'd be pretty crazy to hold bonds right now. And I tend to agree with him on this case. As a person who's worth more than $18 billion, he tends to be right on things. And as a person who's not worth $18 billion, I tend to agree with him. And the reason that he cites for this is the Fed is essentially printing money at this point, and because of that, the Treasury notes on the 10-year basis are only at 0.64% when this was published, so 0.64% per year for 10 years. It's not a great return. There's definitely ways to make more money than that. So if you're holding these bonds and you got a better basis than what they're returning right now, you could potentially hold them longer. However, it's not a good time to buy them. Really, the only game in town is going to be equities. Continue to buy equities at this time. But who knows? Who knows what the market might do? Basically, as the Fed continues to pump currency into the markets, though, these Treasury notes are going to stay low. They're going to continue to borrow money, and they're going to need those rates to stay low so they can continue to borrow that money at a low rate. Otherwise, they could potentially default on that debt and we would have much bigger problems. So they're going to continue to keep those rates low, which is also going to inflate the markets in the short term since there's not going to be any money in holding these bonds. So definitely it's a time to move into equities. So what does this mean for your accounts? Well, I, like everyone else talking about finance on YouTube, have an M1 Finance account. And here are the steps that I took to kind of take that advice into action. So don't do exactly what I do. This is all for entertainment purposes. However, what I did do was I made this midterm bond position a lower percentage weight. I also made this bank balance sheet section a little bit smaller by weight. So it was at 19%. These were both at 19%. I dropped them down to 15%. So what that means is all of the future money for this portfolio for the near term is going to be going into these lower weighted sections. Those lower weighted sections are going to consist of these dividend growth ETFs, as well as O, which is Realty Income Corp. This stock in particular has dropped quite a bit from its highs. It was in the 80s. It's currently at about $52. But I believe that Realty Income Corp is going to survive this little situation and that they will be able to reach those highs again. And if you can buy it at its current prices, you're going to be able to lock in a 5% yield. Another alternative to bonds in the current markets is Lending Club. I know a lot of people don't really talk about Lending Club, but it is still out there. You can still do peer-to-peer lending. And what I do like about peer-to-peer lending is that you can purchase notes, and for Lending Club, it's $25 per note. And then once you've bought that note, you receive payments on that note, and you can use those payments across your notes to purchase new notes without actually having to submit new capital. And that allows you to kind of compound on your notes within Lending Club, so you can purchase interest-paying assets without going into the bond market that do pay a little bit higher return. Back to the news, Paul Singer and his Elliott management is saying that we could see about a 50% decline from February highs. That would be about 14% deeper than we bottomed out in March from the highs. He does kind of look like an evil billionaire in this case, and he is spreading fear. And he is worth about $3.5 billion, which I guess does not verify that he is not an evil billionaire, but he is in fact a billionaire. So he's saying we're going to go from up here at about 338, this is the SPY by the way, 338 up here, all the way down to 226, which was the 36% drop. A 50% drop from these highs would put us way, way off this chart down into the 170 area. So if we come up here to where we're at right now, this is about 27% gain from the bottom. And he's saying we could decline all the way down to below this chart at a 170. Now again, we did talk about him being an evil billionaire. There is a chance he's trying to push the markets down, make sure that bottom comes in nice and quick, so we have a fairly quick recovery, or he's just trying to spread fear and get some clicks. Who knows? On a real note, let's cover some of the general market conditions. This page, I tend to scroll it daily just to see what's out there. It's more positive now than it has been in quite a while. There's talks of reopening beaches, how we're going to reopen Texas, a couple of different sectors might open. Gilead has a chance for a new drug that might help some people. Still down talks on Social Security. Who knows if that's going to be there in the next couple of decades. But that's been the case for a while. This might just speed up the crumbling of Social Security. And of course, we got Dr. Phil out here. You know, he's spreading out all kinds of good stuff, letting us know that we don't close for car accidents, in case anybody was curious about that. Definitely didn't really need his opinion. He's definitely the wrong kind of doctor for this kind of situation. Alright, so things I did this week. I took advantage of the M1 Finance Borrow feature. So if you have more than $10,000 in an M1 account, you can use this Borrow feature. And you can borrow up to 33%, which they will give you here. And currently they're running a promotion. The first $5,000 borrowed will be interest-free through the end of June. This is a great feature if you need a short-term line of credit and you can reduce your credit card bills, or if you have any loans that you can reduce the interest rate on, at least for a portion of the loan, and then you can pay it back at any time. So this is going to be an easy way to decrease the amount of interest you pay on some of your debts. Another thing I did this week was add about $250 to my Fundrise account. I know there's not a lot of popularity in Fundrise because it is pretty illiquid. You are penalized if you withdraw funds within 5 years of deposit. However, this is money that I don't need in the short term. So for me, the 10% gains offered by Fundrise with minimal liquidity and minimal drop in value is worth it. So this is a private REIT, and I do have a goal of getting it to about $500,000 in the next 19 years. And I'm currently on track to do that. So I deposited the $250 I needed this month, and then another $250 next month, and in theory my account value will be above $500,000 by 2039. To quickly go over my current Robinhood portfolio, I'm currently doing iron condors on weekly options. My weekly options so far this week have been pretty good. However, don't use this as a consistent strategy. The month has been extremely choppy, and I'm just about break even with some pretty highs and some pretty deep lows over the course of the month. The last thing I wanted to talk about is my overall portfolio. This is my investments by percentage. Stocks obviously is my largest exposure, followed by REITs. Then I have bonds up here, and then I have lending cub notes, followed by my home equity, angel investments. I do own some stock in Fundrise as well as some startup companies. I also keep a little bit of cash on the side for trading options. It's pretty fun, but I'm certainly willing to lose some of that money. It's a little bit more for entertainment than it is an investment, but there is a chance that I could make money. Overall, though, this one up here includes my cash accounts, and overall this would be my total of all cash assets if I liquefied everything. Everything to this point, of course, is for entertainment purposes only, and now it is time for that jelly. So something I liked outside of the markets this week was the new Crystalia special, and here's what a little bit of that trailer looks like.
That's my new shit, is airdropping random photos to strangers. Dude, it's so funny, man. If you have an iPhone, you don't need to have someone's phone number to text them any picture that exists in the world. Hey, Apple, pictures of buttholes exist.
So, yeah, I'm into comedy specials, and Crystalia is one of the best out there. So definitely go watch that this week. Also, you can reach me at theportfoliobulletin@gmail.com. Have a great week.